Hello and welcome to today's morning report on Friday the 13th of February with me, Rich Perry, market analyst at Handtech Markets. The European trading session has got off again to a strong start, and you've seen DAX, FTSE and CAC all nicely high, around about 0.7% higher on all of those three indices. That's just on the continuing positivity on the back of this Ukrainian ceasefire in eastern Ukraine. But I suppose, me being the cynic that I am, you'd be asking whether this is actually going to continue or not, and whether the Russians are actually going to hold up their end of the bargain. It's very interesting that I've not really heard Vladimir Putin actually once saying that he's admitting to their presence in the Ukraine, but still, a ceasefire seems to be on the table. Anyway, so we'll see how this one pans out, but certainly the ceasefire comes into action on Sunday, and the equity markets have benefited on the back of that today once again. Interesting levels being tested there. You've got the DAX that just did actually rise above 11,000 at one stage, but it's just drifted back down below it. But still, the FTSE looks like it's testing resistance as well. In terms of forex markets, interesting because you had a sharp correction on the dollar yesterday, and that's dragged the dollar index back to this 21-day moving average again, which has been a basis of support recently, and it's being tested once again. Now that move came on the back of the Bank of England quarterly inflation report, actually, and that benefited sterling strongly, and the euro also jumped on the back of that as well. So strong moves there. Also against the dollar was the move by the yen. The strong yen came on the back of the Bank of Japan coming out with a statement that suggested that further quantitative easing would potentially even be counterproductive. So the yen strengthened on the back of that. So not much going for the dollar yesterday. And it's sort of continued today to a certain extent, although just as the Europeans have taken over, it's just slightly seeping away some of these gains. But still, we're seeing some decent numbers today for the Forex majors. Now, we've just had German GDP out, very strong, 0.7% ahead of the 0.3% expected. Most of the others were pretty much in line with expectations, but I suppose that now sets up the Eurozone GDP at 10 o'clock for a potential beat, I suppose. 0.2% expected there, so the market may now be sort of leaning towards a beat of that number, but that's at 10 o'clock today. And you've also got, let me just show you that's Eurozone GDP over the quarterly GDP. And then after that, you've got this afternoon the US Michigan Consumer Sentiment Indicator. That comes out at 3 o'clock. That's expected to come out at 98.2, so very slightly above or pretty much in line basically with last month. Although what we have seen as strong gains in this indicator in recent months, despite the fact that we had retail sales out yesterday that underwhelmed again, but it still seems as though the economic sentiment, the consumer sentiment indicator for the Michigan is still strong. Interesting that I've noticed as well. This wrong chart there. Is this? Oh, good lord, sorry. Is the copper price is now beginning to bottom out, and that should, theoretically, if that is the case, if it does complete a base pattern, then you'd start to see potentially the commodity currencies benefiting from that. I know that the Aussie certainly has links with the copper price, with the Australian economy being so based around base metals. So it's very interesting to see that is basing out, but just keep an eye on that, I would, because it could give you an indication on those commodity currencies. So, going to move on to my chart of the day now, which is the FTSE 100. Now, I wrote the FTSE 100 basically on the closing level that we saw yesterday, where I saw that the fact that the FTSE 100 was just drifting negatively in this range here, and all these bearish tails, long tails on these candlesticks, suggests that the bears are really trying to sell the FTSE, but not really being able to gain the ascendancy. And yesterday we had a move on the FTSE, 0.2% up on the FTSE, but you compare that to the DAX that was up 1.7%. I think that was a pretty disappointing move. But what we have seen today is the FTSE react strongly, but whether it's going to break out or not remains to be seen. I look at these momentum indicators and I'm really not sure that once again that the FTSE is ready to break out. You've seen stochastics roll over with crossover, bearishly crossover with a confirmation signal and also a bearish divergence. MACD lines are crossing over. RSI is up towards the mid 60s again, which is each and every time it's got towards the mid 60s, it has fallen over. So that is also very interesting, and this massive resistance at 6,905 remains intact. So I'm still not quite convinced that this is going to be the time that FTSE breaks out. It'll be very interesting to see if it can do it. The DAX obviously continues to break out, backed by obviously the quantitative easing drive and also the benefit of this Ukrainian ceasefire. But if this ceasefire, I think, gives way, which is perfectly possible it could do, then I think equity markets could well correct once again, and that might take the edge out of the bulls. But certainly I think that at the moment the FTSE has reacted strongly today, but again it's up. It hit that resistance 6,886, and the high today 6,887. So interesting that it's just drifted off the top of that again. So I'm just not convinced that FTSE is going to break out this time. I might be wrong, but at the moment, obviously today is a strong day, but we'll see how it goes. But I'm just a little bit concerned about the daily technicals still. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.